General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, let's do the Chartwork. Today's Tuesday, August the 4th, 2026. Framework phase was expansion. I was sidelined today, just busy day for me. Confidence level is medium. Price delivery signature seen. I don't know if we have an anchor point confirmed, but I'm thinking it could be Tuesday by how we just pushed up today. And I think today could have been a terminus day. It's the market close briefing. The main story today was strong risk on driven by two factors. AI related earnings were much stronger than feared, especially Palantir and Caterpillar, and hopes for the progress in the US-Iran negotiations push oil lower, easing inflation and interest rate concerns. The JOLTS numbers today, 7.36 million versus the 7.44 million expected. A little bit lower. This indicates labor demand is gradually cooling. However, hiring increased and layoffs remain low, so this did not look like an abrupt labor market breakdown. Overall, mildly dovish for rates and slightly negative for the dollar. The factory orders, 0.3 versus the positive 0.2 expected. And then the previous is negative 1.1. So this is a meaningful headline miss. Underneath the report, though, orders for computers, electronics, and core capital equipment remain strong, largely reflecting continued AI and data center investment. The trade balance numbers came out, 73.3 billion versus minus 73 billion expected. The previous was 77.6 billion. So slightly worse than the forecast, but the deficit improved noticeably from the previous month. This is a survey. Consumer optimism remained weak. Canada came out with some strong data. Trade surplus, 3.9 billion versus the 3.0 billion expected. Manufacturing PMI rose 53.5 versus the 52.2. That's good for CAD. And they got oil over there. European data was softer. Spanish unemployment is unexpectedly increased by 19,000. That's crazy. Italian retail sales fell. They already got all the clothes. The major market moving news, oil, yeah, because they're over there in Qatar. So they reported progress towards arrangement involving Iran after safely shipping through the Strait of Hormuz. Yeah, and Iran saying no, it's the same old, same old. Palantir reported approximately 19 or 1.94 billion in revenue and adjusted EPS of 0.41 while raising its full year revenue forecast to roughly 8.15 billion. Palantir surged 29.5. Caterpillar, this even solid. Strong AI infrastructure read through. Caterpillar reported 20.54 billion, up 24%. Adjusted EPS 8.17 versus the 6.20 expected. Construction revenue up 35%, and the order backlog is 72 billion. So demand for data center construction and backup power equipment was a major contributor. Caterpillar raised its revenue growth forecast and gained 5.6. Crazy. AMD beat, but expectations were even higher. So they beat on everything. They gave them 11.5 when they wanted 11.2. They gave them 1.6 when they wanted 1.62. They gave them double the revenue. They gave them a little bit more than what they wanted in the revenue forecast, and these people still mad. And the issue was valuation and extremely elevated expectations after the stock had more than doubled this year. So y'all mad at y'all own expectations. It just don't make SpaceX strong growth, heavy spending, revenue, okay, nearly doubled. The operational loss 143 from 970, so that's amazing. Net loss attributed to shareholders 541 million. Starlink average revenue per subscriber fell 22%. Spending on AI Starship and Starlink expansion reached 18 billion. It's gonna be interesting. McDonald's adjusted EPS beat 3.38, but U.S. comparable sales rose only 0.8% versus the 1.06% expected. Lower income customer traffic and ineffective. Ineffective. So they basically saying they sharking the lower income people for their income. Let me underline this. It's interesting. BP quarterly profit more than doubled. That's because they over there in Iran. Spotify. Yeah, I don't care about Spotify or Pinterest. Nasdaq. However, AMD falling after objectively strong report shows that expectations are becoming demanding. After a 2.5 now Nasdaq advance and a 6.6 semiconductor rally, chasing overnight streak will carry for location risk. Yeah, that's true. I think a pullback would be better. Gold had conflicting macro forces, lower treasury yields and slightly softer dollar were supported. Reduced geopolitical fear and strong risk on equity. Session reduced safe haven demand. Yeah, they like why buy gold when I can buy Palantir. This creates mixed potential rotational environment rather than a clean one directional macro story. The dollar, the weak jolts and factory orders, numbers falling yields, lower rates, high expectation were modestly dollar negative, but because hiring and layoffs remain stable, the data did not create strong recession or emergency easing narratives. Okay, crude oil, currently headline control, not purely technical control. Any confirmation or rejection on the Strait of Hormuz arrangement could produce another large overnight move. It's the Nasdaq. It's higher. Maybe we get like a doji day, a slowdown day. Tomorrow, SanDisk, SNDK, and Western Digital. We do kind of want like a slowdown day, maybe another day to come. Fair value gap bounce. Not just another crazy day. This is the target, though. I'm also aware that tomorrow could be a sale day. Like if we start off up here, and just come for the rebalance of 50%. H1, just crazy update. As soon as we opened, we sat on Monday's previous day's high, rallied. I'm looking at this fair value gap from overnight session and this one from regular trading hour session. I'm also aware of this wick zone that we're currently into. One of these levels can become inversion. So basically, looking to buy reaccumulation in the bullish market. M15, a little bit closer. This opening range gap is left just naked. So I know on the stock chart this is the gap. We could come all the way down here to pair orders, but still looking at just the regular fair value gaps. Monday's first fair value gap is way over here. I don't think we might not come back down to Monday. If we do, that'll be a sell for sure to target Monday low. This is SPX, even bigger, better day. Same plane here, looking for a retracement. It's starting to slow down though. And the way this expansion looks, it doesn't look strong. Looks like weak hands. But I done faded these moves so many times. I'm just not gonna fade it. Unless we got like a breaker set up, I'll wait for the buys. Cause that's your best bet. The stock chart, thinking about 776 here, maybe buys from EQ. I don't know if we return to this gap. Kind of looks like a flat bottom. It is because of how the day opened. So that would be a nice target to sell to. Get a breaker set up, some inversion fair value gaps. You know, Nvidia, to get higher on Nvidia, it wasn't a very strong day, which is probably why that SPY rally don't look real. You need Nvidia to give you the good days because this weighs so much. But we'll see because AMD did super amazing. So Nvidia should start running. Even the post market price is right around the sell off origin. So this would be the real buy side liquidity with 232. Be a swing trade. Put the anchors, like when people put their stops for the sales. So it's a big liquidity pool. And here, gold is not doing anything. It's kind of just hanging out in this range. I still think we can sweep all of this, but if it's not doing nothing, I'm not doing nothing. I'm waiting for it, sitting in the bushes. No trade day. I just had a busy day. With no time to sit, look, focus, plan, or even look at the plan that I had set. As soon as like an off day like that, I'm not gonna force it. Can the framework play out? Yeah. What did I learn about the pattern narrative for myself? Did good not chasing on the day when I had a lot going on. Was able to chill, no pressure to make something happen. I know my time is coming. What will I watch for tomorrow? ADP employment change at SNDK earnings for the memory insight, because memory is going to be an interesting story, especially while we in this fabulous earnings momentum. That's that on that. Y'all have a good day. Peace.